Good morning, everyone. This is the pre-market for Tuesday, August 30th. It's 9:05 a.m. Eastern time. Stock index futures are higher. What you see on my screen is the Globex session. It's the ES. Now, if you look, this is where we closed on Friday, bottom tick, and we followed through a little bit yesterday. Then we have, and we're still having in Globex, including yesterday's day session, the absolute choppiest trade you're ever going to see. Now, what does what can we infer from this? Well, so far, what I infer from this is there's certainly not a lot of conviction and the institutions have not been jumping all over themselves yet to buy this. If this was such a cheap price, you'd see this V bottom. This is anything but a V bottom so far. Now, I didn't expect this decline to continue at this rate of change. I don't know if you could find a more vertical day, even going back into 2020 than we had last Friday. So maybe some of this chop, I should have been more, should have weighted this possibility more highly, which admittedly I did not do. The range that we have seen since Friday's low is extremely narrow. That includes yesterday's range and as well as the Globex range today. I keep getting fooled by what I say, but I'm going to say it anyway. I'm just going to be shocked if we don't get range expansion out of the range of the last 2 days. The immediate key reference area to the upside now, the best one we have, is Globex. There is nothing above the Globex highs except an elevator shaft. And where the market, if we get above there, where it stops is a guess. To the downside, 4,000. This 4,000 level is really important. It's a big option level, gamma level. It's a round number. All of those things sort of combine because the institutions and the dealers, the option dealers, pay attention to these round numbers. They tend to attract option strikes. So for that reason, there is a real reason, not a magical reason. The round numbers tend to be important. Structural reason. So you can see as I'm speaking, we're sort of creeping back down near the midpoint of this structure. This is one auction itself. So I am still biased to the downside of this market. I will not get stubborn if we start seeing strength above these Globex highs, and neither should you. But now heading into the cash session open, I'm biased to the downside in this market. Okay, 931 cash market is now open. What we're seeing here is the Globex view. Now, I want to show you something that I think is important. And I mentioned this before, some of you have just come in since I said this, but there's no conviction off of this low. We went lower yesterday, but what has happened since then has been a complete chop fest. The short story is I'm biased to still, pardon the pun, biased to the short side of this market. Now, if we were to get above the Globex highs, you're in this elevator shaft, and where the market stops would be a guess. You want to be really careful if this thing starts showing conviction to the upside. So far, it really has not. Any spike has been immediately retraced, and that includes the spike in Globex as I'm speaking. Now, I want to go to, I think this is really from a day trade perspective, the more important view. Okay, this is, let me get rid of some of this stuff. It's very noisy. The less stuff you have on your screens, the better off you will be as a trader, by the way, in case you haven't learned that by now. Now, this is the 30-minute chart. You can see there's a gap up on the 30-minute chart. This is yesterday's cash session high, and this is the cash session low. These are going to be important levels. This was extraordinarily vertical. And as I said earlier, my mea culpa, I should have given more weight to the idea that we'd flop and churn around instead of going straight down. This was sort of a waterfall type of decline. I thought it might continue similar to what happened in June. Clearly was wrong. What we're doing now, though, is digesting. This area has not been rejected, at least yet. So that's another reason if they take it above this cash high, yesterday's high, you don't want to be hanging around, because if whoever it is that decided this was a good idea to sell this, if they change their minds when you get above this, there'll be a lot of potential fuel to the upside. Now, I am biased to the downside of the market. Make that clear. I thought the market would be lower yesterday, but in a choppy fashion. Well, it has certainly been choppy, but we've gone net nowhere since Friday's close so far. I think that's going to change sooner rather than later. Okay, 9:53 a.m. and it looks like they want to test the cash flow from yesterday. Below there, you're looking at 4,000. You have to be really careful about being short or trying shorts above 40.63, 40.64, whatever that is up there, that spike, you can see it. This is the cash session, by the way. This does not include Globex. Now, the immediate upper key reference area is going to be today's cash high. I'm biased to the short side of this market. I was surprised by yesterday because we chopped and churned, and in hindsight, I probably shouldn't have been. I had a narrative. I thought we might be following the template of June, where we had the 3 washout days, but Friday was so extraordinarily vertical that actually the response off of that has been quite tepid, and it more or less at this point is validating those lows and that range, because we haven't gone much lower, but we sure haven't gone much higher. We traded very, very briefly and shallow into the range of Friday. So I would look for lower prices here. Yesterday was extremely narrow ranged. We're almost at the same range as yesterday. Actually, the Russell is sitting on its lows, by the way. So I'm biased to the short side of this market. And as you guys know, I'm wrong a lot. So don't follow me over the over the cliff. But in all seriousness, as long as this market is making lower lows and lower highs, which it is doing now, you want to be short. That's subjective. That has nothing to do with opinion. That's, lower lows and lower highs is a fact. How you choose to trade that, well, I think you're sort of foolish if you fight it. Okay, it's 10:10. We've taken out yesterday's cash low. The next number to the downside is 4,000. That's a very important level. It will be interesting to see what happens around this level. You could get some pushback here, but this is a big level. And you could, I don't know what's going to happen, but this is an inflection point. So if you are short, you have multiple contracts on, you may want to consider tightening stop on part of your position in here. Now, if this area if they get through here, we could have another big time rout in effect. So factor that in. All the indices are in lockstep, by the way. All have taken out now. Well, I'll say that has NQ hasn't quite taken out its Globex low of Sunday evening. Not quite. The others have. And when it's 10:35, this is capitulation panic type of selling. This is great if you're short, but you have to keep your head about you. If you are trading multiple contracts, I would start trailing a very tight stop, above the previous 5-minute bar or something on part of your position. Now, this is a trading issue. We could close a whole lot lower today, but we're not going to go down at this rate of change all day long. So if you got short, you have a big fat profit. Take some psychological pressure off of yourself and start trailing a stop on part of your position. Okay, this is another gift horse, guys. You can see on the 3-minute chart here. If you started trailing a stop on part of your position just above a 3-minute bar, you're still in this. So now I'll come back in just a minute. I've got to manage some stuff here, but we'll talk about this and its implications. But this is sort of what I had expected would happen. We had a day respite in there, but this is generating some really, really extreme readings in breadth, a longer term. So if we had another day of this, for instance, I'd be looking for a low, a tradable low. I wouldn't be looking for that right now. There's no sign of it. Price action is definitively lower. The conviction is lower. This is more of the panic type of selling that we saw on Friday. So just enjoy the ride here if you are short. These are the days where you want to make money. You have to make money. Okay, a couple of things here. VIX has taken out, has it? I'm looking, I think it's taken out Monday's or Friday's high. Yeah, it has. It's a little bit off of it now. It's still below 30. I mean, there's plenty of room for VIX to expand here. You can't trade that. I'm just saying there is room here. VIX, is on the cusp of being elevated. I would consider 30 plus elevated, and we're getting close. Again, from an intraday perspective, the market is not going to go down all day like this. Let's look at some stuff, okay? By the way, it's 10:52 a.m. Eastern time. Okay, let's go to a daily chart. Now, this is chart I keep up. I keep the daily chart up. You guys, I've been through the charts that I keep up on my different screens. Typically, I keep this as a daily chart. I had it set to a 30-minute chart today because I wanted to monitor the Globex lows from Sunday night and see if everything was taking those out. That's an important concept. Understanding that when there is conviction in the market, you will have all the indices in lockstep taking out important levels. When an important level is taken out by one and you don't have follow through, that's a heads up. Well, we certainly have that today. Now let's go up in time frame. And here are the daily charts. This is now where, I've been saying where this thing stops in here is a guess. Everything is so vertical. You're sort of in the round number game. The next round number in the ES is down here around 3,900, which is fairly close to this spike low prior to the gap here. So there's a gap in here that people will be pointing to. It's coincidental that it's around that 3,900 level. but that's a level to keep an eye on. In case you are wondering, we did this little exercise the other day, and I'll do it again here. So how far could we go today? What's extreme? Well, Friday was about as extreme as it gets. So if we were to have a Friday, you're looking down here around 3,900. Now, if we go over here to the June swoon and take these levels, okay, that's 3,944. Same area in here. And you guys can clearly see there's nothing magical about this. It's sort of a measured move type of concept about downside tolerance in a session for the market. So there's a cluster of area in here that if we reach this area, I mean, you got to be thinking we're probably close to some sort of at least short-term low. Below here, then a move equal to the trading range of Friday would be around 3,900. So you're basically looking from 3,944 to about just below 3,900 as a window. Now, you can see here is the June low, here is the August high. We're pretty much in the middle of that, I think. I'll whip out the old Fibonacci tool. We'll get the exact 50% retracement. And that's something people look at. I don't really pay much attention to it, as you guys know, but I do use it as a guide for conviction. A lot of conviction up. This is the 50% retracement of that conviction. Right here, we're sitting on it right now. Okay, let's look at other stuff. The NQ. And the NQ is rapidly approaching this pivot low of the 26th, where there is a gap in here. Friday's range, considerably lower. The Russell. There's an area here of volume and where conviction began that we seem to be heading into. Right now, you're in the middle of nowhere. There's just nothing below today's session low in the Russell. That doesn't mean it hasn't put in a low. I'm just saying there's nothing from an objective perspective that you could lean on that you can say, okay, it would be logical to have a low in here. Well, this is the most logical area if we continue lower. And the range from Friday, okay, it's in that area, so that makes sense. And then the Dow, is actually in a little area now. This is sort of equivalent to that area in the Russell, I think. Let's see. And this was Friday. That would be way down here. Now, in the report this past weekend, I did this measured move thing. And my recollection is that we ended up with a target, potential target, based on this somewhere in here. I'll have to go back and revisit that. Another thing you want to be cognizant of at the moment is, We're having a massive bungee jump here, shocking. Let me. Okay, this is the case for this market not getting to the June lows until we at least attempt some sort of ripping upside rally. This 10-day moving average of NYSE advancing issues is at an extreme, and extremes are correlated with at least short-term market lows, even in bear trends. So, you know, today's a big down day. If we have follow through tomorrow, I would, as a trader, I would be getting concerned about pressing the short side of this market, because what this is telling us is that time-wise, we're probably near at least a short-term low. So we need to factor that into what goes on the rest of the week. Now, as you can see, I wouldn't expect, because we have so much momentum, I would not expect this low. I would not be expecting a V bottom where this low was not tested. So at this point now, the easy money has been made. And like Ionis, who cashed out and went to the gym, that's not a bad idea. What you're going to see now, and the best thing to lean on, you could be forming another pivot high in here. You know, we're going to come up and kiss this moving average. At this point, probably don't want to see a trade above this level right here, because if you do, you're starting to push the idea that, okay, maybe that was a low. This looks like, I don't know if this is 50%. Oh, it's probably not 50%. Doesn't really matter. Yeah, it's in that area. There's a volume node here, and it's a 50% retracement of today's range. And again, I'm not using that as a fib thing. It's a observation from 38 years of trading. When you have conviction, that conviction should not be retraced by more than 50%, or it means that you may have formed a pivot high or a pivot low. Okay, 11:28 a.m. We have the sort of the washout type of low here. This is the 4,000 level. This is going to be an important area. We're knocking on the door there. Let's see if they defend this area. If you get above 4012, I wouldn't be fading this market. This is somewhere in the area of the 50% retracement of this entire decline. A lot of conviction here. That's what's important, is today's conviction, which is down, going to hold. The test of that is if we stay below this level. Now, at this point, based on what we've seen so far today, I would still be looking for today's session lows to be tested by one or more of the indices. That may be for you of super aggressive traders. Maybe you go long down in here, you know, maybe you look for a long. Now, when I say that, a couple of things here. Very careful. I want you to listen, because I don't want to be misunderstood. I'm not saying close your eyes and go long at whatever that low is and see what happens. What I'm saying is you begin to look to see if there are signs that that low is a test, and you're going to trade back up to this 4,000 level. And that would require certain parameters be met. Presumably those parameters are in your trade plan. In my trade plan, I have to have at least a lower high and a higher high. So to I'm not sure I'm articulating that well. So if we come down here, then what I have to see in some time frame is this. I have to see the attempt to rally, and then a retracement, and then ideally this level's taken out. Now, if I see this, and then you get down in here and you start to form some sort of really minor balance area, then you can be aggressive, go long here and put your stop, you know, probably 3 or 4 handles below here. That's another way to look at this. But right now I'm flat. If I were to take a trade right now, I would be short against about 40.06, probably 40.07. All right, 12:02 p.m. Eastern time. I think this level up here is increasingly important. There is, if you look on a 30-minute chart, there's a buying tail. You know, I would still, I'm not going to chase this thing higher at this point. I would still like to see a test of the low, but you don't want to be stubborn with shorts now. You know, we have, you can make a case we're making higher highs and higher lows. This is total chop fest. Now, the buying tail you would be into the buying tail below this level. So I'm just sort of sitting back and waiting. I'm not overly eager. And if I had to take a trade, I'd still take a short. I would take a short against just above this high at this point. I would not let it at this point go all the way up into here. This would be as far as I'd let it go at this point. But if I had to take a trade and I'm flat and I'm not taking a trade, it would be short against about whatever this is up here. Again, a couple handles above this pivot high. Okay. 1:22 p.m. We're testing the lows. Now's the time you want to be looking at your 3-minute chart of the various indices to see if everything is following through or not, because that's important. I mentioned earlier, I wouldn't hesitate to be looking potentially for longs in this area, but certain things have to happen here. I don't want to be cut. Now, on the other side of that, you can be short here right now, probably against this high, and then see what happens. You can trail your stop. There's not much risk here, and your potential is that this thing just continues to crater. So there's that, and the trend is down. We're making lower lows and lower highs. We came up here and flirted with this 400 level. It got rejected again. So, you know, we're not near the extreme that we saw on Friday, and we're above you know, the sort of the targets outlined earlier. So we could go a lot lower from here. That's the caveat. The trend is down. You don't want to go long unless you have some sort of at least short-term signal, specifically higher highs and higher lows in a short-term time frame to play the responsive trade. Breadth is negative 2,000 again. So that's sloping lower. That would give me some pause about playing the long side a little bit. So, but this is an area, this is an important inflection point. If you want to be short, that's probably the smart thing to do against maybe 39.80 or so. And then, you know, if you get the big flush, start trailing a tight stop, and we'll see what the afternoon brings. But today is shaping up maybe to be one of those washout type of days. This is going to be this area in here, this general area, how the market reacts from about here to here will let us know if we're going to have that washout all the way down into, let me pull it back over. Here's the daily chart again. Down into, what is this, the mid 3900s or not. Now, I want you to make note of something here. Notice what I use to evaluate the market and what I don't use. I'm not using indicators. Now I do use breadth, but breadth is auction market information. It's actual trading. It's actual issues up, issues down. There's no magic involved. Now, the closest thing to magic is what I did here. I showed you how I did it, how it was derived. It's something you can reproduce consistently. So just letting you know. So we'll see. We'll see if we get that continued downside washout like we had last Friday. Okay, it's 2:53 p.m. Eastern time, and we're chopping and churning. Not a big surprise. You know, bounce strongly off of this level. Now, if we get above this last little pivot here, they may make a sharp run towards this pivot high here, which is just above. This was just a stop run above 4,000 is all it was. It went above 4,000 by a little bit. And this is a really important area. I said that prior to the spike up in here. Now, if we get below this little pivot, then we may test these lows again. Okay, 3:12 p.m. Eastern time, we're approaching this 4,000 level. This is a great level if you are long to be taking partial profits or at least protecting part of your profit. Now, this area, it's a broad area from about, I'm going to do this so we can see it. Let's take this off. So there's this broad area. I'll bring this down a little bit to catch this pivot high. From 4,000. So I'm going to shift this down from 4,000 up to about 4012. This is a area that you could get pushback from. They may find it difficult to get through it, etc. So you're already getting a little pushback. I wouldn't be too greedy. If you get up in here, start tightening your stops. If you haven't already, you certainly don't lose money on this trade. You know, if you bought the break of this, your stop, I wouldn't let it go below break even on a situation like this, because truly in anything other than a super short-term time frame, the trend of this market is still down. So this is an area in here you may want to take some partial profit. You may want to tighten your stop on part of your position, et cetera, et cetera. Okay, 4 p.m. on Tuesday, cash market is closed and the market chopped and churned around. Easy money was stopped about here. I think I pointed that out. This is more typical of what you see. I mean, this was a fantastic opportunity here. Now, on last Friday, which was extraordinarily unusual, the market went straight down all day long. That very, very seldom happens. This is more like it. This is more typical of what you get. You know, if you look on a daily bar, you're going to see an open here and a close here and think, oh, wow, all I need to do was stay short. But most people, even if they made money here, they gave it up here, getting chopped and turned around. So make a mental note of this. You see it over and over and over and over and over and over again, and you will continue to see it over and over and over again. You know, going back and capturing these charts and studying them is the way to learn to trade. Okay, so where are we? We are in the middle of nowhere between the June low and the August high, basically. I'm going to get rid of some of this stuff. We'll talk about it a little bit. We go to the, I'm going to make this GlobX. So this is full session data here. Here's the daily chart. And this 4,000 level is, we're going to close below it, but it's still in play. It's very important. Very, very important. We are in the early stages of what could be, I'd say not, you know, maybe early stages, maybe the mid to late stages is better, of a waterfall decline similar to something that we saw back in June. Now, you know, the more wide range down days we have, yesterday was sort of a short-term lull, but we've been pretty vertical since the high on Friday. If we have another wide range down day tomorrow, I'm not going to be pressing it. In that particular instance, what you're looking at, you're looking time-wise, at least as it stands now, for time-wise, we should be near a tradable low. Price-wise, you don't really know because they can crush it again. You were near a low time-wise on June 10th, but the low was a lot lower, and the price low came on the 17th. Now that included a weekend in there, but I would think within a minimum, certainly by Thursday, if we continue lower into Thursday, you're looking at a short-term low, and it could be in place today. There were, let me see, let me look at another chart here. Yeah, there are divergences in breadth, minor divergence, but a divergence nevertheless. You can see here, this was at the absolute low on Friday. We had a higher low yesterday and against Friday, and then a lower low against Monday, but a higher low against this low. And you're also on a 3-day basis, you're getting extreme to the downside. You're getting really, really compressed in that time frame. So that leaves this market highly susceptible to ripping rallies at any time. Even when they crush it 25 or 30 handles, you have to be watching like a hawk for that 20 handle rip your face off rally into some level. So that's what I think is going to be something to watch for as we move forward into tomorrow and into next week. It's tough in here because this is the high, the August high, this is the June low. We're in the middle of that. So you're sort of in the middle of nowhere from a development perspective. Now, I'll refer you back to the weekend report, and in that report, if my recollection serves me correctly, you know, this was sort of an idea for a measured move type of target down in here. If we reach that if we reach this week, then I think you're going to see a short-term low before you see this low taken out, even if this low is eventually taken out. Now, going into tomorrow, going into Wednesday, if we get some sort of ripping rally, what you're looking at is something that still doesn't close above today's session high. I think today's session high is a really good immediate upper key reference area. So this general area is the area within 10 handles either way of being an important upper key reference area in the very, very short term. And again, below today's session low, you're sort of in an elevator shaft. You're leaning more on the internals and what those extremes are. You're watching the intraday structure of the market, lower lows, lower highs, etc. Guys, have a wonderful evening, and we will pick this up in the morning.